an essential topic to wealth for individuals, wealth for households, and wealth for communities. This topic is not talked about or covered very much in the personal finance space on the internet, especially on YouTube. And honestly, I see it as one of the central biggest plagues towards the financial well-being, particularly for Black Americans, but for significant amount of Americans as a whole. We're going to be talking about what it means to be underbanked, what that is, why it's so bad, how it affects your finances, your credit, your ability to build wealth. And we're going to dive a little bit deeper beyond that, particularly for the Black community, where we're going to be talking about the declining rates of Black banks in this country and how it's likely going to be worse, and how that factor alone will contribute greatly to the further decline and degradation of Black wealth in Black America and in America as a whole. So we'll be covering a good bit of information. I'll keep this video to a moderate pace, but I do want to get the information that I want to cover. Very, very important stuff for yourself or your family members, your loved ones, your peers. You may be in great shape. You may have multiple healthy banking relationships, access to financial resources. You may be doing great. You should still stick around in this video because there's people around you. Again, particularly if you're in a Black household or Black community, there are people around you likely care about who are struggling with this. So I'm going to be bringing a lot of statistics, a lot of valuable information and insight as always. And towards the end of this conversation, we'll be talking about what we can do better, how we can improve this, and you know what it looks like to take action and actionable steps to improve this metric. So let's talk about the percentage of underbanked households in the United States right now. Currently, as of 2023, the most recent data shows 14.2% of U.S. households are considered underbanked. And this is according to the FDIC themselves. This represents about 19 million households in America. These households have a bank account, but also rely on non-bank financial services to meet some of their core financial needs. We'll talk about that in a minute. So let's get into the weeds a little bit further. What percentage of Black Americans and Black American households, rather, are considered underbanked? This number, unfortunately, is staggering. Now, this data is a little bit older. This is as of 2019. But this, again, seems to be coming from the FDIC. As of 2019, nearly half, 49% of Black households were either underbanked or completely unbanked, compared to 15% of white households. This means that a significant portion of Black Americans rely on alternative financial services like payday loans, check cashing services, in addition to or instead of traditional banking. That is tragic. Nearly 50% as of 2019. And I don't know what you think, but since 2019, 2020, so the time of this recording in 2025, 9 out of 10 times, I'm going to assume that things have not gotten easier for Black households in the last 5 years or so. So if it was 49, nearly 50% in 2019, I dare to say that data is less promising now. So a little bit more of a detailed breakdown. Unbanked, basically, according to the Federal Reserve Board, 13% of Black households lack a bank account entirely. That is insane. While only 3% of white households are unbanked. Underbanked, 27% of households had a bank account but still use alternative financial services compared to 9% of white households. Crazy. Financial inclusion gaps. These gaps in financial inclusion can hinder Black Americans' ability to build wealth, save, invest, and fully participate in the economy. The whole premise of this channel, as I've been stating for over 2 years now, how important banking is and the foundation of banking for you as an individual, for households, for communities, states, nations, and the list goes on. Racial disparity. The underbanked and unbanked populations are disproportionately Black and Hispanic, with Black households making up a larger percentage of unbanked households than their representation in the overall population, meaning that there's a serious gap in our financial health when it comes to banking versus the amount of us that are in the population as a whole. So let's get into some deeper statistics. But let's see here. All right. What does it mean to be underbanked? Let's talk about that for a second and back up and put some context on this real quick. Being underbanked means having a bank account, but still relying on alternative financial services like payday loans, check cashing services, money orders to meet some financial needs. Essentially, it's using non-traditional funding options even while having access to mainstream banking. So key characteristics of being underbanked. You have a bank account. So that's unlike being unbanked, where you don't have a bank account at all. You might have a bank account, but you rely on alternative services. They frequently use services like payday loan lenders, pawn shops, check cashers to access funds or manage financial transactions. Everybody that's an adult in the room should know that this is extremely expensive. But let's move on. Limited access to traditional services. This could be due to various reasons, such as high fees, lack of access to physical branches, or a preference to speed and flexibility over alternative services. May face financial instability. Relying on costly alternative services can lead to higher debt and make it harder to build strong financial foundations. So going back to the statistics that I just covered, it was around 19% of US households, or 15%, but it was nearly 50% of Black households. And as you just read just now, it's making it abundantly clear this is essential and detrimental to your ability to build wealth in this country. So let's go to, how does this affect one's finances? Higher fees, limited access to credit, challenges in saving, inconvenience and time constraints, reduced financial flexibility. I'm not going to read into all of the data points, but behind each one of those, hopefully you can just understand that enough and see how that can be detrimental to your ability to build healthy financial circumstances for yourself as an individual or as a household. Let's get into this one a little bit deeper. Being underbanked, which means lacking sufficient access to traditional banking services, can negatively impact credit health by hindering the ability to build a positive credit history, increasing reliance on potentially costly and risky alternative financial products. Sounds rough. So limited or no credit history. So how being underbanked affects credit health. Limited or no credit history, reliance on alternative financial services, difficulty building savings, which is tied into development credit, potential for financial instability, as we covered a little bit earlier. Specific impacts: check cashing fees, higher interest loans, limited access to credit, which we shouldn't need to talk about, but difficulty obtaining a mortgage, car loan, and other forms of credit needed. Difficulty building wealth. Underbanked individuals may be excluded from traditional financial system, the traditional financial system, making it harder to build wealth and achieve financial security. So, in essence, being underbanked can create a vicious cycle of lack of access to traditional banking resources, leads to reliance on costly alternatives, hindering credit health and long-term financial well-being. Literally, the foundation of this channel is built on this. The very first video I shot, which was 600 plus videos ago, was literally talking about being bankable, amongst other things. It is essential. I work in the banking industry. The bulk of my career has been in banking and financial services. This is near and dear to me because I literally have helped thousands of individuals, and at this point, many hundreds of small businesses, and seen the impact of being underbanked or not having bank access at all, or taking for granted your banking relationships and not taking it seriously, and how it undercuts all of your other efforts to build wealth. So let's get into another topic. If you're specifically in the Black community, nearly 50% ratio of being underbanked and not having reasonable access to financial services, or not taking advantage of reasonable access to financial services. The next topic that comes in hand is, okay, well, why is this the case? One of the problems is we don't actually value banking, in our households and in our communities, because we don't have many of them in the country. It's not a staple of our community. We don't have very much representation in the banking and financial system. And so it's not something that's taught to us, that's passed down. It's not something that's valued and put in context for us coming up in our households and coming up in our communities. We're actually taught that that's one of the areas we were most marginalized in. So that brings me to say, what year were there the most Black banks in America? Interesting facts / statistics. Between 1888, which is after the Emancipation Proclamation, our whole, all of that, and 1934, there were 134 Black-owned banks. So my question, if that's the case, 134 sounds solid. Most of that took a hit when the not the recession, but the depression came late 1920s and 1930s. So we were up to 134 at one time during open discrimination, segregation, etc. By the way, let's put context on this for a second. Literally at a time where it was open discrimination. This is the Jim Crow era I just named out for you. This is the inception of the Klan I just laid out for you. And during this period of time, we had more black banks by magnitudes. Where are we today now? Or most recent data? There are only 20 black-owned banks that qualify as minority depository institutions in the country. That is insane. We have more access to the financial system and the entire economic system as a whole. And we have a fifth, maybe a sixth of the banks that we had back when there was open discrimination, back when there was Jim Crow, back when we couldn't drink from the same fountains, back when we couldn't use the same bathrooms or restaurants. That is insanity. So what determines the health of black banks? Let's get into this for a second, and then we're going to round this out a little bit deeper and talk about this more openly. What determines the health of black banks? The health of black banks, like other financial institutions, is influenced by several factors. The first is going to be financial performance metrics. Profitability. This can be measured by metrics such as return on assets or return on equity. A healthy black bank demonstrates consistent profitability, indicates efficient operations, and effective asset utilization. Asset quality. The quality of a bank's loan portfolio is crucial. A low ratio of non-performing assets signifies that borrowers are meeting their obligations, and the bank is effectively managing risk. Liquidity, meaning that adequate liquidity to cover unexpected deposit redemptions, is vital for stability. A high loan-to-deposit ratio could indicate potential liquidity issues. So to put a couple of those in context and in English, one of those is going to be the asset quality and the profitability of the bank. That basically means they need the ability to be able to have loans on the books, because loans are assets for banks. That's where they're making money. That means they need to have a healthy amount of loans out, and those loans need to be paid current and on time. They need to be, issued out to people who can afford them and are going to pay them. So that's where the money comes in. It mitigates losses, and it also brings in profit. Liquidity is the next one. That basically means the ability to have deposits on hand. So if you have an unnatural or abnormal influx of people coming in, redeeming their deposits, aka withdrawing money, you can handle that. Your bank is able to continue to, function at a healthy capacity. So we're going to get back to this in a minute, because we need to talk about why black banks are struggling right now and why they are likely going to be struggling significantly more in the near future. We're going to come right back to that topic in a few minutes. Access to capital and deposits is number two. Capitalization, deposit growth. Black banks often face challenges in raising capital compared to larger institutions. Limited access to capital can restrict their ability to lend and expand, impacting their overall health and resilience. Deposit growth. A stable and growing deposit base is essential for black banks to fund lending and investment activities. Trends like the hashtag Bank Black movement have encouraged individuals and corporations to deposit funds in black-owned institutions, providing a crucial source of capital. Economic conditions and community context. What do you think that basically means? Economic health serve communities. Black banks predominantly serve communities that have faced historical disadvantages and may have lower than average incomes and wealth levels. Economic downturns can disproportionately affect these communities, impacting borrowers' ability to repay loans and potentially impacting banks' profitability and asset quality. We just mentioned. What that basically means is you have an unhealthy clientele base, the bank itself is going to be unhealthy. If people can't qualify for loans or don't do a good job of managing those loans, if people have low deposit ratios, have job instability and can't keep deposits on the books, they have poor savings rates, a bank can't be healthy. Impact of lending policies. Practices like redlining have created systemic disadvantages, limiting access to credit hindering wealth building in Black communities, says Robert F. Smith News. Black banks play a vital role in providing financial services to these underserved areas, but they may face higher risk and operational costs. Operational efficiency and technology adoption is number 4. Government policies and support. Let's talk about that one for a second. Based on the political environment we're in right now, where everything's being defunded. Community development financial institutions, CDFIs. I did a whole video on how President Trump and the current administration has broken down the funding, the government portion of the funding to this program to bare bones, essentially. Community development financial institution programs, CDFI programs, government programs and initiatives like CDFI Fund provide support to institutions serving distressed communities, including many Black banks and other minority depository institutions. This can help increase access to capital and financial resources in these communities, and it's been cut as of 2025. So on top of the fact that the health of the Black community financially is struggling in many capacities, government funding and support, which is going to be some revenue coming from the entire country, the government is going to funnel into these programs that funnels into these institutions to support us, has been cut to its bare bones. Fair lending and housing policy. Government policy aimed to prevent discriminating in lending and housing can create a more equitable environment for Black banks and their customers. In summary, the health of Black banks is determined by a complex interplay of financial performance, access to capital, the economic health of the communities they serve, operational efficiency, government policies designed to support these institutions, and address historical disparities. So back to the helm of what I was stating, but banking and the other metrics of financial health, so banking, financial resources, financial tools, products, services, etc., is something that is not promoted in our households because for a significant amount of generations, it has not been a staple. It has not been a scenario where we're in proximity to banks that represent and serve us intently. We have access to banks all over the country, respectfully, thankfully. So it's not to make it seem like we only have to Black. Excuse me. But what it does mean is that the banks that are Black owned and predominantly, so let's talk about that for a second as well. Let me see if I can find another one real quick. Health. Okay. Anyway, I lost it. But what I wanted to cover is when you talk about what a Black-owned bank, that means that 51% or more than 50% of it is investors are individuals in Black-owned businesses and corporations. Okay, to put context on that, their ability to serve us is going to be, that's going to be what a value is in having Black banks. It doesn't mean we can't bank anywhere else. This whole channel, as usual, as I stated, is dedicated to helping you master the banking, relationship banking, and master the banking system and the lending system. So I'm teaching you access to every financial institution that's of quality worth banking at. No questions asked. But that having been said, there's a different level of collaboration that can be had in continuity when it's a Black-owned bank in a Black community serving a Black community, because there's a level of understanding, there's a level of relatability there, ideally. And that's where the value in Black banks comes in. And it also comes into the community impact of saying, okay, cool, this should be familiar to us. Literally, this is such a fundamental base premise of wealth creation, which again, our entire community is completely in the dark on. That's really the baseline of where I come in with that, what I teach on this channel, because I see it every day. But our community doesn't even understand that we're looking for all of these high level, complicated ways to build wealth. And that's why we're so attracted to the content creators and internet gurus that give all of these complex business hack, credit strategy, LLC, corporation, shelf, all that other BS. When in essence, building wealth is a lot simpler. It's hard, but it is a lot simpler, not easy to do than what is put out there. But because these people can trick you into buying programs, buying classes and courses from them, because they're making it seem so complicated, like you got to go through all these loopholes or try to get you to completely circumvent these financial institutions. But back to my point, we should have banks in our communities that we can turn to and that are familiar and that are pillars in our community. It's the same conversation we have about, policing each other and policing ourselves, rather, etc. And I'm not trying to create a segregation type of scenario. I'm not getting into all of that. I'm just simply saying that regardless of how integrated we are, every community, nationality, race, however you want to break it down, tends to have their own in almost every capacity. There's representation in lawyers and attorneys, judges, there's banks in their communities that are mostly governed and ran by them. There's policing that is identified by them, firefighters, so on and so forth, public school teachers. These people tend to look like each other in their communities on average. And there's value in that. It doesn't have to be out of hate, disdain, prejudice. There's just value and familiarity, period. That's just a human thing. So at the end of the day, for us, you see the outcome of it, right? You see that. I don't know how many of you are familiar with the whole the Black wealth poverty thing of 2053, the projection essentially that there's going to be like a flat or negative net worth for Black Americans on average by 2053. I've kind of covered that in the previous video. I'm not the first content creator to do so, but I did cover the topic, and it is fascinating. And if you look at these types of statistics where we're almost 50% underbanked or unbanked, that's not even talking about the remaining 50% doing it effectively. So when you put all of that together, you see we don't have the fundamentals. All of the other metrics of wealth creation, like business ownership, real estate ownership, health, proper insurance, all of these different things are on top of banking relationships. They're on top of healthy banking. Everything else that builds wealth and makes you wealthy and keeps you wealthy is on top of the banking system. And this is why this is what I do on this channel to try to teach. So Black banks not being prevalent in the modern time is contributing greatly, or there's a correlation or causation, either one or both, to the health of the Black community. That's the underlying fundamentals to the foundation. And it scales up, by the way. It gets into the more complex strategies and complex ways to build higher levels of wealth and maintain it. But at the end of the day, we don't 20 banks in the entire country when there's 4,000 plus financial institutions as a whole in the country. Do you have any idea how minuscule that is for 14, 15, 16 million Black Americans? That is insanity. That is insanity. So you don't have the remaining institutions that are non-Black only have so much incentive and only have so much burden to try to reach us. It's not necessarily even about discrimination at this point. There's just enough other people to bank and have a good business without having to get a bunch of us. If we bank there and we bank there effectively, great, but they don't need us per se. They want to tap into a market that we could be, for sure. But at the end of the day, we're not necessarily big enough or prevalent enough to the point where it's like we literally have to reach out and make an effort to connect with the Black community because our banks won't survive without them or be profitable without them. It's not quite that bad because they still turn around and get check cashing fees off of us. They still turn around and find a way to get money on us or through us in some capacity or another. But we're not benefiting from it. We need more Black banks in our communities to normalize banking in the first place. We need more Black banking in our community to give that educational foundation to wealth creation in this country. It's not that complex. It is not that complex from a financial aspect to build wealth in this country. It is not easy, but it is not complex. Banking and the banking system is essential to wealth creation, cash flow management, credit building. All of these different components are the fundamentals to everything else. You having a job and income in the first place only means something if you have cash flow management. Where do you get cash flow management tools from? Banks. Your ability to get into homes, buy real estate, invest in real estate, start, grow, and fund a business, you need credit. Where does quality credit creation and building come from? The tools and the resources to build credit? Most cases, banks. Even the alternative fintech companies that y'all are drooling over and over marketed and that are oversold on are backed or started or funded by big traditional brick and mortar banks. If you get into the weeds, you're looking at all of these different fintech companies. When you get into the fine print, you're going to see such and such credit union, such and such bank. It's going to be banks that's right there in your community or right, in your neighborhood or in your zip code or in your city that are just that are just finding other ways to reach you. Their traditional business models might not be able to manage the risk you are directly. So these fintech companies and the way they structure them and the way they come out and the laws they don't have to follow and rules, etc., allows them to bank you or lend to you in a non-traditional sense and get that market share. But it's still the same banks. It's the same banks still. A lot of y'all are just like enamored with what you think is this new evolutionary change. My G, it's the same people. They're just changing makeup. That's all they're doing. It's still the same banks that you are ignoring or don't have access to. But you're getting hyper with these fintech companies and these new ways we can avoid credit because they're going off on my paychecks and blah, blah, blah. My G, that's First Tech Credit Union behind that one. My God, my lady, that's Chase Bank behind them. That's Bank of America. That's the same people. So they just find new ways with technology and adjusted regulations to find a way to reach you, because normally you too broke, you too poor, your credit is too ridiculous to meet their regular business model in their traditional brick and mortar bank. So they found another way where, there's no overhead or little overhead, there's no branches, there's less rules, there's all this other stuff they're able to maneuver to find a way to get access to you and usurp that value. And you still coming out on the shit end of the deal, excuse my French, but it is what it is. I just gotta be honest. This is a really big problem generally for Americans, but for the Black community as a whole, like it is bad. For those of you who are serious about the core ways to build wealth, stock ownership, ownership in companies, ownership in real estate, in your own business, mastering your own W-2 job, which means managing your cash flow, building an effective credit so you're paying the lowest rates possible, and not only in borrowing, but insurance. A lot of y'all are running from and avoiding credit, thinking you're just, staying out of debt and staying safe, and you paying more for stuff because you don't have credit. You're still paying more for stuff. You're still losing and missing out. This is a problem. This is a very big problem for the community as a whole. 50% is insane. That is diabolical, like sinister. You serious? 50% of our community, 7 or 8 million out of 14, 15 or so plus million Black Americans, statistically speaking, are unbanked or underbanked. You don't have access to the basic functions of money. That is crazy at a decent price, at a decent access point. That's crazy. That is insane. There's no way you're going to tell me you're going to turn around and trade Forex, crypto, Dogecoin, when you don't even have a damn bank account. You don't even have a bank account. What are you talking about? You're sports betting, but you don't even know how to manage a bank account, or you don't have access to a bank account, or you have one and you don't know what the hell you're doing with it. Like, it's insane, and it needs to be addressed. All I'm going to do is bring it out to you in the statistics. And again, somebody who works in the banking system for 12 years plus now, 11, 12 plus years, banking and financial services, seeing this stuff firsthand. Listen, I run across people that for Black America and non-Black America, and the working class or working poor from these two different sizes, night and day most of the time. What the baseline or the low level looks like for a Black American that doesn't understand or have access to the financial system versus, the white or the Asian bartender or whatever the case may be, their financial understanding, IQ, and access is still light years over a lot of the same people doing the same kind of work from the Black community. That's how deep this runs. It runs very deep. So if you're serious about wealth creation, or other people who are around you that you want to see successful, you want to help, or you hear them talking about wealth creation, but they fit these statistics, this is serious. It needs to be addressed and it needs to be talked about more. I see people marching about what people group we from and all this type of BS here. And no disrespect to anybody that calls themselves Hebrew Israelites and all these other, groups. We've been in America, all this other BS. for Black America and the resources we need to develop a healthy individuals, healthy households, and healthy communities, like banks, like more involvement and more engagement and more control over the school systems that our kids are going to and the health system, all of that. All of that, but banking is at the fundamental root. It doesn't get more core in the foundation, the health of a community, of a people group, than the money. We have little to no control over 20 banks. And who knows the condition of those financial institutions? So to close this out, where is this headed? Well, the economic system and the political system now is in a very tough place. And as I read off to you from the Google guides and the AI's, AI data generated information, telling you essentially that there's a disproportionate impact of economic uncertainty and economic downturns on us in the Black community. So if it hits on one level for one group of people, Asians, whites, East Indians, etc., if it hits them on one level, you can basically up the knob of magnitude for us in Black America. If unemployment is ticking up, it's going to be abnormally bad for us. If rates are going up, we're going to pay abnormally more money and our cash flow will be thrown off significantly more. If assets spike in prices and inflation goes through the roof, it's going to hit us harder because we don't own anything, but we pay for everything. We want to buy everything. We want all the stuff. At the end of the day, Black banks, the 20 that are left, probably are going to struggle, a good portion of them, because their core business model was supposed to be us. Their inception of their existence is supposed to be us. So if we're struggling financially, I just read off to you, that's going to make it a very difficult day for them to stay profitable and to continue to have enough resources to provide for our communities. Our health as individuals, households, communities, and businesses predicates the health of Black banks. If Black banks collapse all the way out of the system, then that vicious cycle circles back around with a lack of proximity, a lack of education, and a lack of direct service in the financial system for us. What does that mean? Lack of access to financial resources, lack of access to credit, lack of access to capital, lack of access to participate in the economy. Now you can see why we might not even make it to 2053 before there's a zero base or negative net worth in Black America as an accumulative whole. Now it's nothing complicated about it. So proposals, how do we try to resolve this issue? Well, we have to start with our individual selves and the individuals around us, our family members, community, whoever that we have access to, and start to promote the value of the banking system, the actual traditional brick and mortar banking system, not all these back end hack strategies and Google BS that y'all falling for because y'all are trying to circumvent the system to build wealth, which is retarded, and all these other people are making a lick off of y'all. We have to get away from that BS and actually get to the real fundamental core foundation to building real wealth, which is the banking system. Ladies and gentlemen, we have to get back to that. Not only get it back into the value of the banking system, but shout out to people like Killer Mike, who I remember personally over the years promoting banking Black and the value of Black banking. I don't even remember maybe if he opened a financial institution or is a big owner in a Black financial institution. But shout out to the people who have been on this, blowing this trumpet and warning signs for years now. Shout out to y'all, because we need to get back to that. We need to take it serious and understand everything else that we want to aspire for as a community in this country. It's going to come from the money. It's going to come from having control, influence in the financial sector. Everything else that we want to build and create. So that means it has to become relevant to us. We have to teach it and we have to learn it ourselves, teach it to each other, and then stick to making it a part of our custom and our culture to value the banking system and to get into the banking system, work in the banking system, own financial institutions, invest in financial institutions, and have say-so in them. We have to do this, and we have to do it at scale. All of the money that we earn and spend in the Black community, which is a very significant amount, has to start funneling through our financial institutions as well. I'm not saying not to bank anywhere else or to access exercise access to any other financial institutions. But what I'm saying is we have to have our own. Because when things get hard, as I've filmed in many videos and I will continue to cover, when things get tough and dangerous economically, financial institutions, just like any other living entity, is going to confine itself to the familiar, and it's going to confine itself to those that it is, to the proximity of those closest to it, and that it's designed to serve at its core. What does that mean in plain English? You know, white wealthy banks are going to focus on white wealthy individuals when things get really rough and uncertain, not out of prejudice, out of familiarity. I need to be able to do business and deal with people who fit my core business model and are already familiar. And that's going to go across the board. So if we don't have financial institutions that are dedicated to us, when we're in economic and political environments like we're in right now, where things are getting rough and uncertain, people, institutions, and entities will be less likely to give us a shot. We'll get denied for more bank accounts. We'll get denied for more credit cards and loans. We're going to get more bank accounts closed. We'll be subject to higher fees. I just shot a video talking about, you know, focusing on your primary banking relationship and how they're going to treat you if you're laid off or if your budget gets thrown off because inflation gets out of control and your cost of your income hasn't kept up with it. Like, being at the right bank is crucial, because if not, you're going to throw away hundreds of dollars, thousands of dollars a year in fees and interest. It matters. How are you going to build wealth when you can't even manage the money, the in and outflows of your money, without paying an arm and a leg to do so? But you want to own real estate. You want to start this multi-million-dollar business. You want to do this back-end trick hack where you travel with your LLC and write it off on your taxes. Boy, y'all need to stop. Like, for real, y'all need to stop. Y'all can't even manage the basics yet. And you need to be honest about that. And that's where we need to be focused as a community. And that's why I don't do the overly sexy topics. It's not because I don't know how this stuff works. It's not because I'm not familiar. To be honest, I'm not boasting or bragging. But I understand this stuff better than a lot of the gurus out here, because a lot of these individuals, they just learn this stuff in a book or a mentorship they started a year ago. I've been doing banking and financial services for over a decade, and I'm in my 30s. I've been doing this. So if I wanted to sell y'all a bunch of BS, I could have been doing that for a long time, and this channel would be a lot bigger, making a lot more money. We'd be doing a lot better. I'm giving real quality information on here because I care about my integrity on this topic, on these things, my integrity, period. And I care about those of you who are taking the time out to watch this content and learn from me. I want you to get real information, real, actual, verified, time-tested, proven strategies to build wealth. I'm not going to sell you a bunch of BS. The banking system is crucial. And if we don't take control of it and take it seriously as a community, within our households, as individuals, we are going to lose financially as a whole, not individually. Some of us are going to do great. I don't know about y'all, but I'm good. My family, those who are under my covering, are going to be fine. But anybody else out there who isn't understanding this or isn't figuring this out, or on the wrong side of that 50%, shall I say, y'all are going to be in trouble. Because at the end of the day, the baseline of this entire thing is access to financial resources and scaling up use and more access to these financial resources and being productive with those resources. At the end of the day, that all the banking system is at the base foundation today. So I'll wrap this video up. I don't see anybody familiar in the chat or any comments in there from those who have jumped on and off on live. For those of you catching the replay, if you made it this far, like, comment, share, subscribe, comment down below and let me know your thoughts. Support the channel so this channel can continue to support you. I want you to comment your thoughts. I want you to comment your perspectives. Let me know how your banking relationships are going. Let me know your philosophy around it. It's clear, obviously, if you're in the Black community in particular, let me know what you think about this topic as a whole. When you catch the replay, let me know in the comment section what you think. I respond to the vast majority of my comments that are sensible in the comment section. So y'all comment down below and let me know what you think. Let me know your inputs. Let me know your criticisms, etc. Let me know how you're feeling on the topic. And we'll keep this conversation going and continue to hopefully get the word out so we can better serve more people in our community and better improve the health, the financial health and well-being of the Black community as a whole. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. If you want to get in the description section so you can tie in with me on Instagram. If you want to get in the description section so you can work with me one-to-one, where I can coach and mentor you around your banking relationships, your access to capital as an individual, your access to capital for business, etc. Several other services that I provide and skill sets that I have. You can get in the description section and get an idea of that down below. Other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.